Hello, my fellow investors. This is the Intelligent Investor here. In today's video, we're going to be talking about how you can still be profitable in a market crash. Now, before we start the video, guys, use the link in the description down below to sign up with Acorns. If you guys sign up with Acorns, you're going to be entered to win a free stock, and that stock will be Chevron. Now, those who didn't win it in the previous Acorns giveaway, then you will be moved to try to possibly win this one. So you're still going to have a chance. So stay tuned for that and be good. So the next stock I'm going to be talking about too is Apple. Now, we hit 5,000 subscribers and I did an Apple stock giveaway. If you guys didn't win that one, then you're going to get another chance once we hit 6,000 subscribers. So once we hit that, I'm going to be doing another Apple stock giveaway. So stay tuned, put the notification bells on, and keep watching the videos. So let's start with the video. How can you still be profitable in a downturn market? So for me, I have a well-diversified portfolio. I have my risky stocks, my growth stocks, and my dividend stocks. So with my dividend stocks, I have 5 dividend stocks with 1 dividend growth stock. And I have my monthly paying one, which is Realty Income. This company is a good growth stock that constantly pays a good dividend and increases it every year. So this is something that I get every month, a return every month. And if we go down here in its history, you can see that they pay a decent dividend. So I get this money and reinvest it, and that keeps growing my portfolio, keep buying more of its own shares, so that these are actually companies that I just kind of let go and let them run their course. Same thing with Chevron. Chevron is right now completely undervalued, so I did buy 10 shares here in Robinhood. So you guys can actually know I do have a Fidelity portfolio. So a lot of people tell me, well, what happened with these stocks and stuff like that? I'm like, I do have a Fidelity portfolio. That's where I have my large holdings. So if you guys see, that's where I have a lot of my big stocks, which mainly consist of some of these stocks and Tesla. So that's where I do day trades, swing trades, and I have my big portfolio, which I get passive income there. So once I get used to editing and all that stuff, I'll be reshooting those videos in my Fidelity portfolio and show you how big that portfolio is, because it's a great portfolio. So I'll soon get back to that. But again, Chevron is a good company that pays a dividend. As you see, I have a dividend day coming. For 10 shares, I'm getting $12.90, which is really cool. That is going to be completely reinvested, and the portfolio is going to keep growing. I'm going to increase my number of shares, and I'm just going to let it grow on its own. So same thing with AT&T. AT&T, I have 123 shares here on Robinhood. AT&T has a huge dividend yield. So if you go back to its history, if you see the dividends, for this one, I got $41.87, as you see here. And it was with 80 shares. So now I have double that. Not double, but I have, 40 more or something like that. So I'm going to be getting about $60, $70 next time on pure dividends. So that is the power of dividends once, you start getting that going. Same thing with Coca-Cola. They also pay a dividend. I reinvest it, and that helps my portfolio grow more and more. So this is what I'm hoping it goes to. Even though there is some bad times in the market, these dividends getting reinvested is actually helping the portfolio grow slowly. Apple is the only company that actually pays a low dividend, but it's a growth stock. So at the end, I'm looking more for the growth than the dividend. But if you look at its history again too, they do pay a dividend for me, and they paid a decent amount. Not a lot, but it's something for me holding the shares. And again, I'm trying to hold this long term. My goal for Apple is 2024, 2025. I'm going to keep it long term, but that's where I want to load up as much as possible, because once they release the Apple car or they go with someone, this stock is honestly probably going to hit about $500 again. So that's what I'm waiting for. I'm trying to load up on this stock as much as possible. And this is where I transition. So as you see, I have Realty Income, Chevron, AT&T, Coca-Cola, Apple. Those are my base stocks. I don't touch those. I don't sell them. I did accidentally sell Apple, but long story short, had to jump back into it again, and that's why I'm down on that. But I actually got it at like 110. So those are my base stocks. Now I have EXPC, ACIC. Those two stocks are my potential growth stocks. Both of them are SPACs, which will merge. I'm going to keep these long term and hope for the best. I mean, I believe that each one of these can actually go over $100 plus within the next few years. They're both something that I feel are going to be revolutionary to the market. They're going to be revolutionary companies and the first of their kind. So I'll explain more about these later, but I do see a lot of potential in these companies. So I'm investing heavily on both of these. And these are something that these are like my new Teslas, as you would say. They're completely growth stocks that I have so much hope for. Now I have my risky stocks, or my swing trade stock, which is APXT. A lot of people bought into APXT thinking that they were going to merge in February, and they actually pushed that a little bit towards March or early April, so that's why the stock shot down. I'm just going to honestly catch a swing trade. If it goes up to 25 to 30, that's where my sell point is. It's a great company, honestly. It's a good future potential stock, but for me, I'm just looking for that swing trade before the merger, and I'm out. AMC is a company that I also jumped into just for the fun of it. For me, I was willing to lose all of it here, and I didn't care. I mean, I just wanted to be part of the holding, and it's just YOLO money, as you call it, And honestly, I am down, $64 so far here. I'm down much, much more in my Fidelity portfolio, but at the end, I didn't lose any money there because I used dividend money for that. So, for example, I have Realty Income, Chevron, T-Mobile, Coca-Cola, and Apple. I get about 100 just on Robinhood. I'm not talking about Fidelity, okay? On Robinhood, I get about, close to $100 in dividends every 3 months. Actually, a bit more. And sometimes I don't reinvest that money and I keep it as buying power. And I use that buying power to buy into stocks like AMC, APXT, something that I'm going to take a little risk on. So when I bought AMC here, the reason I only bought 15 shares was because I got dividend money, I saved the buying power, and I bought into AMC, and I took the little risk. So, I mean, that's what I did there, and that's how you're supposed to do it, guys. If you guys are in the market, you need to diversify your portfolio. You can be successful like this even though there's a market crash because you still have big corporation stocks that will sustain you. If you're just buying into a bunch of AMC, APXT, Churchill Capital and stuff like that, then you're down in the dumps. A lot of these stocks are risky stocks here, but you need to have a base of good dividend giant stocks. Okay, you need to have big corporations as well. If you're going to take a risk with, let's say, CCIV, like people did, that thing blew up to 60 and then it crashed. And a lot of people lost a lot of money, and I know a lot of people that did. But if you were well diversified, you wouldn't have worried too much about it. If you would have had these base stocks, like I said, then you would have been real good. Okay. So like I say, I have Apple, Coca-Cola, AT&T, CVX, Chevron, and Realty Income as my base portfolio stocks. I have here on Robinhood a few thousand shares. a few $1,000s of each of these shares. Okay. And that's what I'm doing here. And the rest of the little money goes down to these little corporations. And that's where I do my risks takes, So that's one thing I want you guys to know, that if you're going to take a risk, don't put a lot of money on the risk. Make sure you're well diversified, have a good portfolio, and understand everything you're invested in, okay? I know everything about each of one of these stocks, okay? I know what ACIC is. I know what EXPC is. I know what APXT is. AMC, I knew the risk. Apple, Coca-Cola, I know all these corporations in and out. I know their profits, their books, everything. So I only invest into what I know. I don't jump into everything. So I can know what I'm getting myself into, when to buy, when to sell, and what the outlook is for them in the future. And that's something you guys need to do if you guys want to be profitable. So like I said, always make your base stocks safe and invest most of your money there. Then you can use a little bit of that money on the side to take riskier stocks. Okay. And that's something I need you guys to actually understand, because that's the only way you're going to be profitable in the stock market. You don't want to see something like people. I've seen people invest like $300,000-$400,000 into GameStop, and now they're down to like 70,000, and they lost so much money. And I'm telling you, if that person would have invested those $300,000 into AT&T, that person would have had 10,000 shares of AT&T for 300,000. Your return for that year, just by having $300,000 of AT&T, would have been $25,000 on pure dividends. Okay. So that's something you have to have in mind. This person lost 200 and something $1,000 on a risky stock because he put all his chips on GameStop, and that thing collapsed. His potential was high risk, high reward. But what happened is that he lost. If he would have dumped his money in AT&T, those $300,000, by the end of this year, he would have been up $25,000. And that would have been a sure thing, because he would have received that dividend. And that money, he would have reinvested it. Then next year, he would have had about $375,000. And his portfolio was just going to keep growing like that. So that's something you have to have in mind. Have some safe stocks, because also compounding your interest is something that's very beneficial. So make sure you diversify well. Don't put your chips in one bag. Try to be a little bit more expanded with safe stocks and risky stocks as well. And that's all I pretty much wanted to talk about this video. I know it was a lot of information to take in, but this is the way you're going to be successful. If you guys want to check out my Fidelity portfolio, it's in one of my previous videos. I did own a lot of Apple stock. I showed you there when I owned Apple and Tesla and how much they've made me. And, I showed that portfolio's value. So a lot of people are telling me, hey, I don't listen to a person that has a portfolio that's under 10,000. I'm like, check my Fidelity portfolio and that'll shut you up. And I'm telling you, it's over $1 million. So that's something you guys have to check out. I'm not a little idiot that doesn't know anything about the market. I'm not here just talking out of my butt. So I've actually have a lot of experience in the market. All my money was made in the market. It wasn't made anywhere else. It was made in the market. So I've been doing this for 12 years, 29-year-old guy, busting my butt off to actually learn everything I can and help you guys with it, because I didn't have that help when I was younger. So I'm trying to help you guys here as much as I can. So that's pretty much it, guys. Thank you for watching, and I'll see you guys next time.